Hey guys, welcome to another Husky run. You're looking at some pictures from our trip to Cabo last week. We got back last night and the dogs are ready to run. So I ran them last night and ran them again just now. So 75 degrees, perfect day here in Arizona. That last picture was a funny one. I bought a bunch of hats. You got a lot of people selling in Mexico, and one of those was a Seahawks hat with the Seahawks in the Super Bowl. I'm pretty excited, so I had to buy one. So that was me in the airport wearing all my hats because I couldn't fit them in my suitcase, so to speak. So if you're new here, this is how most videos start. I don't control the pace. The Huskies do. It's hard to get these guys leashed up when they are so excited to run. So that took me a little bit to get them wrangled to do so. But they're dragging me out on another dog run today. I figured that was a perfect time to talk a little bit more how I actually invest, because I get a lot of questions about that, especially after one of the first videos I did was about how I kind of get monthly income from options. So I went high level on that, and this is going to be kind of high level too. But just to be upfront, this is not financial advice. I'm just sharing what I do, what's worked for me, and why I like it. So me and my wife, Christy, we just got back from Cabo. Like I said, it was an amazing trip, great food, great weather, much needed reset. It'd been a tough couple of months, with my mom passing and, trying to get her estate settled and, getting her grave site, all that stuff. It's just really emotional. And so we just got away for a week, and it was great. And it was a much needed reset, like I said. I wanted to share something though, not to brag, but to demystify the whole idea of options income. That entire vacation was paid for by about 2 weeks of option premium income. Not from my whole portfolio, not from some crazy risk YOLO trade, just from a small portion of what I invest. That's kind of the key point to this video. If you remember anything, it's you don't need to swing for the fences or risk your entire net worth to create meaningful income. And that's what selling calls and puts does for me, at least. You just need consistency, discipline, and boring repetition. So before I talk about options, let me zoom out and explain how my investments actually are set up. Most of my money is not tied up in options trades. The core of my portfolio lives in broad, boring ETFs. The four ones I own are QQQM, SPY, RSP, and SGOV. Let me break those down in plain English. The QQQM is a growth engine. That's basically the NASDAQ 100, big tech, innovation, growth. You're getting exposure to companies like Apple, Microsoft, NVDA, Google, Amazon, without having to pick winners. I like QQQM because it's growth oriented, it's low cost, and it lets me participate in long-term tech innovation without overthinking it. This is not something I trade in and out of every week. This is long-term money. I don't touch it. I don't even look at it. Maybe look at it once a month or once a year. SPY. So that's the market backbone. It tracks the S&P 500, 500 of the largest U.S. companies. This is the foundation. If American businesses grow over time, SPY benefits. It's boring, it's dependable, and honestly, boring is beautiful when it comes to investing. So RSP, why I like it and why you might too. This one deserves a little extra attention, in my opinion. It's also RSP is also the S&P 500, but it's equal weighted. That means Apple doesn't dominate the fund. NVIDIA is the largest company in the world. That doesn't dominate it. Microsoft doesn't overpower everything. Every company gets roughly the same weight. Why does that matter? Because market leadership rotates. Sometimes mega cap tech runs the show, like it has the last few years. Other times, mid cap or value stocks quietly outperform. So RSP gives you better diversification, less dependence on a handful of giant stocks, exposure to broader market strength. I like RSP because it balances out my tech exposure from QQQM. Think of it as a counterweight to the entire portfolio. And SGOV, that's where I park cash. It's basically short-term U.S. treasuries, anywhere from 0 to the 3 months out. This is where I keep cash I want safe, money earning interest, dry powder for future opportunities. It's not exciting, but it's stable. And when you sell options, having cash available matters. So where options fit? Now here's the important part. Options income is only done on a small portion of my portfolio. This is not my retirement backbone. This is my income engine. I usually focus on 5 or 6 individual stocks. Names I know, I trust, and I'm comfortable owning long term. The stocks I use for weekly income that I sell calls and puts on, that's AMD, Microsoft, Google, Amazon, Meta, NVDA, and TQQQ. If you use it carefully, that's the volatile one. So it's not for everyone. So these all have a few things in common. All those stocks, they're high liquidity, they're tight bid-ask spreads, they're strong option premiums, and they're businesses I'm okay owning if things go sideways. So a high level, here's what I'm doing. If I own shares, I sell covered calls. If I want to enter a position, I sell cash secured puts. Time frames range from 5 to 45 days. I'm not trying to hit home runs. I'm trying to stack singles every week. So a simple AMD example, this is basic. Say I own 100 shares of AMD. I might sell a call option expiring in 7, 14, or 30 days at a price I'd be okay selling the stock at. So if it's selling at, say, $240 today, I might write the expiration for 2 weeks out and the selling price, the strike price at like $250, so $10 higher than it's trading at today. If AMD stays below that price, I keep the premium. I still own the shares. I can do it again next week. If AMD goes above that price, my shares get called away. I lock in gains. I redeploy the cash. Same idea with puts. I sell a put at a price I'd be happy to buy AMD at. If it drops to that level, I get assigned. If not, I keep the premium. No drama, no chasing, no screen staring all day. This approach fits my personality because I like predictability, repeatable systems, and not stressing about every market headline. I can go on vacation, I can run the dogs, I can live my life, and the income keeps showing up. So in future video, I'll walk through actual weekly trades, show how I pick expirations, talk about risk management, and explain mistakes I've made so you don't have to. So if you're interested in building steady income without gambling, stick around. Now, I'm gonna have to dry this dog off, and we'll see you next video.